Okay, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time, August the 4th. Let's kick things off first while we have a new 4-hour bar open up on our 4-hour charts of the futures. Let's see if we make a new lower low or a new higher high. We'll spend a few minutes because that new bar just opened up just now. Let's talk about the economic data that has been released and that will be released. Yesterday, we saw ISM manufacturing data, that's the Institute for Supply Management, come out with economic data that was better than expected and better than the previous read, which is good to see. Now, where we lack some, hey Sam, where we lack some was in construction spending. The expectation was for a rise of spot 5% versus a prior read of 1.7%. Actual came out at a negative spot 7%. So a mixed bag. Today, we're going to get factory orders. The expectation is for 4.6%. The key to this number is that it comes down to 10 a.m. So if it's a horrible number, everybody's used to numbers that come out at 8:30 a.m. Not everybody. Me, I am. This one comes out at 10 a.m. So you got to keep your keep an alert set. Tomorrow is where things get really interesting because we get the ADP read on employment, trade deficit, but more importantly, the ADP number. That's the precursor to Friday's non-farm payrolls. We'll see the unemployment rate. And normally, this just goes to show you how conditioned we are, or I am, is that I just skip over initial jobless claims still. But that's still a big number, or it has become a big number, and that comes out on Thursday. And the expectation being 1.4 million new applications. So a lot of economic data coming out this week in conjunction with earnings. Let's get to the futures action. I'm kicking things off this morning because nat gas is a really interesting chart. We're seeing a big short squeeze here. We've seen this before. As I mentioned earlier, this is a 4-hour chart, and these will all be 4-hour charts. You saw the same type of setup back here, and they didn't end well. So I'm not looking to go chasing nat gas. It was on our watch list. Not this past week, but the prior week. I believe it's still on the watch list. I'm looking for a retracement on nat gas and a spot at which to enter to the long side. Let's take a look at the dollar, which finally popped yesterday. Wrong symbol, Bob. There we go. All right. All right, so we're seeing a reaction to the downside this morning. This is going to put a bid or continue to keep a bid under commodities, at least in the short term. The question now becomes this: do we put in a new higher low? And if we do we take out the prior high? And if we do, you may see a bit of weakness in commodity names. Now, me, this is important because we have a balance in our portfolio of names that'll do well on a weak U.S. dollar, weak yields, as well as a hedge with positions that will counterbalance a rally in yields and a rally in the dollar vis-a-vis the financials. And there we go. So all I care about right now is do we break out above this pivot point? Not so much break out above resistance, but a breakout above the pivot point. Sticking with commodities for a moment, let's talk about copper. Dr. Copper, it's broken 4-hour support. And this is the second time in the past several days. So we were in a multi-week consolidation. We broke down on the 31st, rallied back to recapture, failed yet again. So copper on a 4-hour basis showing a little bit of weariness, but it's still on a weekly basis looking good. So what I would do here is amend this chart a bit. Set up a tripwire. And this lets me know whether or not we're beginning to break out above weekly resistance on Dr. Copper. And if Dr. Copper rallies, that's a sign of economic strength to a certain extent. Unless, of course, yields and the U.S. dollar are plummeting, then it's just a reaction to inflation pricing. Sam, I looked as usual at the COP data, Bob, and copper should go up for a while. The weekly chart does look good, Sam. When I look at the 4-hour chart, it's really just a look on a very short-term basis and how we might open up. It's really not an analysis of what we're going to do longer term. That's why I went to the weekly chart, and yeah, I would agree that longer term, unless we fade here on the week, it's still early in the week, but the way the chart looks at current, it appears as though longer term, we're going to continue to rally here. We're just stair-stepping up higher. But I would assume that unless we have strong economic data, that the only thing that would cause copper to go down is a rising U.S. dollar and rising yields. Thanks, Sam. Back to the 4-hour chart. Because what we do here, folks, we're just doing a very short-term view of how we're going to open up. With members, I do a market wrap after the market closes. Now, gold is up this morning, over a third of a percentage point. Still a monster here. We did take some of our gold mining position off the table yesterday. Now this bar here just opened up. I should have actually made this a higher threshold. No, I want to remove this one. There we go. Now the question is, do we break out to a new daily high or do we fade? Obviously, odds favor bulls here. So the chart still looks strong on gold, silver, I want to check in on Bitcoin as well, which really came back after Sunday's mini flash crash. Silver, still an animal and a half. If you wanted to call this an inverted head and shoulders setup, I'd be good with it. Left shoulder, head, right shoulder. Here is the neckline. So silver looking still quite strong. We're going to go over bonds in a moment. I want to wrap up with commodities first. Where's my nat gas? And then we'll segue over to equities. All right, nat gas we actually went over. In Fuego. Expect a pullback here. Light sweet crude. Consolidating nicely. This is now support, but we are down on the session 1.22%. We're holding support in a tight consolidation. Not a buy, not a sell, just a watch. Ag broke out last week, so I want to take a quick peek at some of the ag names. And we're expecting a pullback. We're looking at the DBA. That's a fund putting you long of the ag names. We're expecting a pullback there, perhaps down to $14 per share as a long entry. So wheat is pulling back. Corn pulling back. All right, so it's doing what we expected. We're getting our pullback. Oats pulling back. Good stuff. All right, moving on. Let's go to first. Let's go to bonds. I want to take a look at the 10-year Treasury note. You saw a pop in yields yesterday. We have an inside week thus far on the week on yields. Do we fade? Do we break out? We don't know. It's very early in the week. Way too early to draw a conclusion. So, a good overnight price action. When I went to bed last night, we were fading here a bit. But overnight, we rallied back up and into resistance. We have a breakout on RSI, but no breakout on price yet. This is getting busy with these lines. I'm going to have to clean this up and start over again. We'll do that tomorrow. For giggles, let's throw another one up here. All right, so tight consolidation. So the jury is out. Do we continue to put in lower highs and lower lows, or do we ultimately break out? Jury's out. If we break out here, expect some weakness in the commodity names. I think equities could still rally higher. Yields are ridiculously low. But expect some weakness in commodities short term anyway. Longer term, they're going a lot higher. Let's talk equities. The S&P 500. This is why I wanted to wait to come to equities. I wanted to go over the economic data first and commodities first as well before equities. I was looking for, on this 4-hour chart, how we would finish off this last 4-hour bar. We did manage to rally back a bit, and I wanted to know whether or not we would take out the lows of that 4-hour bar. Thus far, we have an inside bar, 4-hour basis. We're down spot 21%. So yeah, look at how they rallied it back. Final minutes of that 4-hour bar. So we're down slightly on the S&Ps. The NASDAQ, which made new all-time highs yesterday. Here's the NASDAQ 100. Very similar to the S&P 500, but actually weaker than the S&P 500. The Russell, which really had an outstanding day yesterday, is flat. Actually up, now up. I think this is where the money is going to be going. Excuse me, the small caps. On a daily basis, the NASDAQ is a bit stretched relative to its third standard deviation Bollinger Band. At least on the Qs, the NASDAQ 100. I think where there's room to run is a short squeeze on the Russell 2000, and that's where I'd be looking. And we are positioned accordingly. What did I miss here? I guess we'll take a look at the Dow. The Dow's about flat. All right, let's go to some chart requests. I have a list of members' requests I need to go to. See how many I have today. I did some last night. There shouldn't be many. All right. Beyond Meat. I think Beyond Meat reports today, if memory serves. So, FYI there. All right, so Beyond Meat monthly chart. Looking okay. We're up and into resistance. Not much going here. Not enough data. Oh, this segment is brought to you by TrendSpy. The next evolution in automated technical analysis. And one of my favorite things here is the volume-weighted pricing. And you can see that we have a tug of war. And by the way, there's a 35% discount code down below in the description area. The lowest price you're going to get on the web because I do so much business with them. You could see that at this price point, there's a lot of history here, a tug of war going on. Once we blow through, or if we blow through, I should say, let's call it 138.62. It's game on. You could easily see new highs on Beyond Meat. It looks as though on a weekly basis we are flirting with a breakout here. Let's go to a daily chart. a really good day yesterday. We broke out above resistance. So what I want to know is, I use TrendSpider for all my alerts for equities. I want to know is, do we break out? We'll keep this active for the remainder of the week. Set it and forget it. I really only care if Beyond Meat breaks out. If it pulls back, it's pulling back on disappointing earnings or a sell the news event. We'll revisit at some point in time in the future once that selling pressure alleviates. But Beyond Meat at current looking good. I would not buy it before earnings. I'm not the kind of trader. Too much risk, not enough reward. You know, maybe you'll get lucky. Good morning, Kat. Long time. You just hit the like button. Thank you very, very much. I appreciate that, Kat. What else do we have here? HCVI, and ADT. I took a look at ADT yesterday, and it was a monster and a half. And I've been looking for security plays, not cybersecurity. We already traded cybersecurity. Not that I'm opposed to getting long yet again. But with all the rioting, who doesn't want security nowadays? So that's a play. That's like a Smith & Wesson play or a Strum & Ruger play. People want security. So HCVI, Activision, we'll go to ADT in a moment. I already hyped that one up. New weekly high, or new monthly high, I should say. Retested. Looks like we're going up higher. Weekly chart. Beautiful. Nothing not to like here. Our indicators are strong. Daily chart, very powerful. Strange, I have no monthly. Oh, here we go. I just overlaid monthly support and resistance on a daily chart in dashed line. I think we have a price target here of 91.06 to be specific on Activision. I'm loving, absolutely loving the higher lows and the W formation on the Stokes. A really pretty chart. I don't know if they've reported earnings or when they report earnings, but a caveat is out there on these names. A little bit extended if I had a negative to say relative to the third standard deviation Bollinger Band. We're not above it. That doesn't. So, given yesterday's price action, bullish key reversal bar, I think we go higher. ADT. My mouse is giving me a problem here. What are we doing, mouse? Okay, that's better. Kat, what are you looking at? Sam, what are you looking at? Any symbols? I have a few minutes left. All right, ADT. A huge day yesterday. Let's go to the monthly chart, begin there. All right, so I can't buy this thing. I would love to buy it, but it just blew out of the gates. I'm not sure what the news was here, what event. You got it. But we need to see a retracement It just blew right through this volume shelf. This is going to get retested. And that's a good thing. So I'm going to be setting up an alert here for sure. Where do I want to set it? Do I want to be greedy? Let's not. All right, I'm going to keep this active. I don't know how long it's going to take, so I'm going to keep it active for a couple of weeks. I want exposure. Given these ridiculous times, I want exposure to residential security, whether it be through a Smith & Wesson, or I'm probably going to get demonetized for that, for even saying Smith & Wesson, or a security play. So our alert is set. It's active for a while. So I'm good to go here. ADT, I think it needs to retrace. It's very extended. Where's our RSI? It's not horrible on RSI. Well, yeah, it is horrible. I'm sorry. It's near 90 on RSI. I think we need a retracement. And then we'll look to get long. Hey, NY Jets. AUMN. Okay. I'll go to Google first for Lady Cat. There's a Google VIX. I was unaware of that. Let's see what that looks like. Oh, I don't have access? Or do I? Yeah, man. Give it to me. This level of access is included with our gold level membership. I use the exact same functionality because I like to complain back to TrendSpider that I don't have enough functionality. So as I give them more business, I complain more and more. So I provide more value to members. I'll play with this offline, but it looks interesting. There's a Google VIX. Interesting. All right, back to Cat's play. Monthly chart first. A rough end of July. Thus far this month, an inside month, but I mean, second day, it was really only one day in this bar here. Let's go to a weekly chart. That's not a weekly chart. All right, so right off the bat, if you're looking for an entry point long, we're right at weekly support. So it's a great place to enter and place to stop right below, maybe even last week's lows to keep it a little bit loose. But I will caution about, I'm not sure where we're at here yet. We do have a little bit of resistance above. So I would just be wary of that 1483 mark. At current this week, I mean, again, it's only one day in the week so far. So we do have some weakness on RSI. Here's the daily chart, picking up that weekly support. Let's validate that. Actually, two support levels here. So I have weekly support and then another daily support level below. I would defer to the weekly. Stokes is still weak and declining. So any position that gets put onto the long side, I would say stay small. Anticipate some backing and filling as these Stokes correct and try to find some support, and then begin to hook back up. But we're at favorable support levels. You could argue that last week we did a retest of daily support. This week we're possibly putting in a higher low. Here's Friday's price action. Here's Monday's price action. Let's go to the Raindrop Charts. See how we closed out the day yesterday. Not wonderful. You saw some selling, a fade into the close. For those not familiar with Raindrop charting, it's unique to TrendSpider. Again, there's a discount code below, 35% off. And you saw into the close. This is what I primarily use, the right side of this candlestick. It's a mixture of VWAP and candlestick charting. You saw some selling pressure into the close. So I don't see a rush here to get long. I see a reason to get long, and that's that we're retesting weekly support. I don't know how heavy I would get, though. And it's not a short, at least not yet anyway. I think you could buy here with a stop loss right below. And then add more on a rally up and through 1491. That'll have your Stokes breaking out. That'll have your RSI breaking out. And then nibble as we move higher. That's how I would play it. You bet, Cap. All right, so AUMN, we'll make this our last symbol of the morning. You bet, NY. Thank you very much. I'm glad to be here. And if you folks just joining, if I could ask you to smash that like button and follow, I'd really appreciate it. It helps me out with YouTube. All right, so golden minerals. So we did see a pullback off the highs. That was no shock. It was expected. We were extended. We've spoken about this chart many a time, and I have little doubt that I've brought up the fact that we were extended, expect a pullback. We got the pullback. Now we move on as we proceed into a new trading month. I like the fact that we're finding a bottom at the 200 period moving average in red. RSI pulling back. I think we're going to get a stochastic pop here, meaning we rally, pull back. Those who think that you shorted a Stokes after they roll over, after being above 80, they're going to get burned, as always. So normally you get a pullback and then a hook back up. And that's what I'm expecting here. So far this month, we're up. We're off the lows of the month, near the highs of the month. Weekly chart. Friday's low is really a great place to enter. And what is that? Spot 39 per share. Where did we close yesterday? Spot 4.3. I mean, it's a penny stock. It's a big percentage move. That's not perfect. You know, if you want to negotiate getting long, you want to get in a spot 4.1, spot 4.0. I think that's reasonable. The only thing I would caution on this weekly chart is that, and this is no reason to avoid a long trade, is that we do have a lower high on Stokes, and we are flirting with a breakdown. But I wouldn't worry about this just yet. I like the setup. I worry more about price and volume, more so than anything else. Daily chart. Very tight triangle formation. We did technically break out yesterday. I would like to see a retest of the breakout point. Stokes is still relatively weak on a daily basis. What that leads me to believe is that you're probably still going to get some backing and filling here on AUMN, and that's okay, especially if we see yields move up higher. Let's see what the dollar and bonds are doing really quick. The dollar's flirting with a support level. You know, you need, if you're going to trade the miners, you need to really keep an eye on yields and the U.S. dollar. We're breaking out now on the 10-year Treasury note. That means that yields are falling. That bodes well for gold. I bet you gold picked up steam here. And if it didn't, that's a tell. We're flirting with a breakout, but no real gains on the breakout on Treasury prices and a pullback on yield. So let's keep an eye on this. So AUMN looking good. I think longer term it's going up higher. Good retracement. I still remain bullish on it. And with that, folks, I'm going to say everybody have a profitable trading day. If you can hit that like button, subscribe, share with a friend, leave a comment, and I will talk to you soon. Again, have a profitable trading day and be well.